This is East Asia Tonight.
Good evening, I'm Ateli Edwards. Tonight's top stories from East Asia. Japan's Prime Minister raises the stakes in a leaders' debate, vowing to resign if her ruling bloc fails to win a majority in the upcoming snap election, just a day before campaigning begins. Meantime, Japan's Iron Lady is losing ground. Polls show her approval slipping below 70% for the first time, with rising doubts over her economic plans. But support for her ruling LDP has edged up. Taiwan on alert after China's latest military probe, including top General Zhang Yuxia, a shakeup that has reduced the Central Military Commission down from 7 members to just 2, including President Xi himself. And South Korea detains 55 of 73 people sent back from Cambodia, accused of running online scams. The hundreds of victims, policies say, lost more than $33 million.
And I'm Roland Lim, and Hong Kong's Asian Financial Forum is underway. Top leaders talking growth and making deals. But the big question is whether geopolitics and US-China rivalry is set to bite in 2026.
And a brand new China-backed city gradually taking shape along Sri Lanka's coast. A multi-billion-dollar bet on a new economic future for the South Asian island nation. Leaders of Japan's 7 political parties held their first debate today, ahead of the country's lower house election on February 8th. Prime Minister Sanae Takaichi's ruling Liberal Democratic Party plans to appeal to voters through the suspension of an 8% sales tax on food and beverages. Ms. Takaichi stressed that there is full consideration given to the sustainability of public finances. It's a proposal also suggested by opposition party, Centrist Reform Alliance.
内閣総理大臣としてと、いうことで問われますとね、これはやはり内閣にいるわけですから、財務省、財務大臣にも頑張っていただいて、実際に消費税率、2年間に限定して、食料品をゼロにするということになると、ちゃんとそれに見合う財源が確保できるのか、これも内々に、しっかりと調べました。
Ms. Takaichi, whose party is heading into the election with its new coalition partner, Japan Innovation Party, reiterated a pledge that she would step down as the country's leader should the bloc fail to attain a majority.
ただ、やはり今回の選挙で自民党が負けたら、私はもう内閣総理大臣ではありません。やりたい政策もできません。
負けたらっていうのはどういう
つまり、自民党と、維新で過半数が取れなかったら、私は即刻退陣することになりますので、歯を食いしばって頑張ってまいります。
Campaigning for the general election officially begins tomorrow. Well, today's debate is a chance for parties to make their case to voters. The election will serve as a first major test for the new opposition party, which was formed through a merger of the Constitutional Democratic Party of Japan and the Komeito Party. Komeito ended its long-standing alliance with the LDP last October, making a significant shift in Japan's political landscape. Meantime, fresh reports suggest the approval rating of Japanese Prime Minister Sanae Takaichi has fallen ahead of the election. A Nikkei newspaper survey shows that support for her administration has dipped below 70% for the first time since she took office. Polls from Kyodo and Mainichi newspaper also showing similar declines. The Nikkei survey also suggested an increase in voter skepticism over Ms. Takaichi's economic plans. Her decision to call for an election before the approval of a record national budget has prompted criticism from the opposition. 2/5 of respondents in the Mainichi survey were displeased with the election timing, as opposed to a third who approved. Meanwhile, a Kyodo News poll says that the LDP is the most favored option for voters, with 29% saying that they would choose the ruling party. Now, that is a significant lead over the almost 12% planning to support newly created opposition party, the Centrist Reform Alliance. The Japanese leader is hoping that her strong personal polls can broadly help lift support for her ruling party, which has been hit by scandals in past years. China's sweeping corruption purge putting a spotlight on its military leadership, with the country's most senior general, Zhang Youxia, being investigated for grave violations of discipline and the law. Taiwan says that it's keeping a close eye on developments.
我们当然会持续的高度关注，中共党政军高层这些异常的变动。就我们国军的立场，基于中国从来不放弃以武力犯台，所以我们重视的是，我们要以各种的联合情侦手段，以及跟友盟交换情资，来掌握各种的征候，来判断中国可能的企图。
The 75-year-old is President Xi Jinping's second in command as vice chairman of the Central Military Commission. Well, he is widely seen as Mr. Xi's closest military ally and one of the few senior Chinese officers with combat experience. Now, another top military general, Liu Zhenli, is also facing a similar probe. Right, and to help us unpack further, let's bring in Dr. Yang Zi, Research Fellow, Deputy Coordinator of MSc program at the S. Rajaratnam School of International Studies. Well, thanks, Dr. Yang, for joining us. So let's just talk about this purge and how the Central Military Commission, as we've reported, is now down from the original 7 down to just 2. Help us interpret this development. I mean, is it a case of chaos or control?
Yes, it's a very unusual development for sure. The fact that Xi can still take down such high-ranking generals without much of a fuss means that he's still in control. However, we should not forget that, conducting such a blunt operation will have an effect of alienation on the other generals and admirals of the PLA. It's definitely putting everyone in a condition of fear. There's definitely going to be resentment. So perhaps now Xi is still in absolute control, but as the situation is in flux, we cannot say that it's guaranteed for the future.
Now, if you mentioned that this is a very rare move, just how unprecedented is this? I mean, we haven't seen something like that in decades, perhaps from the Mao era?
Yes, last time something similar happened was perhaps during the Cultural Revolution, which was many decades ago. So after the Cultural Revolution, military leadership succession have mostly been very smooth and peaceful. Especially when it comes to such sudden purges of career military professionals, it's quite rare in recent Chinese history.
Now, you've mentioned that perhaps it's a sign that Xi is trying to consolidate control here, but do we know, I mean, what's the difference between a military, that's more loyal to him versus one that's more effective? And where do you think the balance is landing right now?
Sure. So if you've seen the recent PLA Daily editorial, you can basically read a lot of bitterness and resentment from that with regards to Zhang Youxia and Liu Zhenli. It seems like there's a very awful breakup between Xi and these two generals. And a lot of the statement was about Zhang and Liu chipping away at Xi's military power. So when it comes to, effects on PLA's modernization, I would say that, yes, in recent years, we have seen the PLA progressing rapidly in terms of hardware, but these purges are going to hurt the morale and esprit de corps at the very top of the PLA. And rest assured, these kind of purges never stop at Zhang and Liu, and all of their associates have been put on notice or already under investigation. So yeah, I would say
So in that case, you mentioned about the fear and resentment. I mean, there's still a lot that we don't know from here. But in other words, you're saying that this is not going to be the last that we are likely to hear of it. There's going to be a lot more purges going forward.
Yeah, sure, their associates will be targeted, but these are probably not going to be publicized.
Right, and I want to talk about next year. It's a big year. I mean, China is marking its 100th anniversary next year. It is a key milestone. What's going to happen to leader succession plans, PLA's modernization goals now?
Yes, in terms of Xi's own successor, I would say it's still too early for him to pick one. In terms of successors to, say, Zhang and refilling the pretty much gutted CMC, we might see the promotion of new officers to assist Xi. But of course, we'll probably see more loyalists and military professionals being promoted.
Now, in one of your reports, Dr. Yang, you said that the likelihood of a major conflict in the near term is low. And of course, we know that Taiwan is watching this very closely. How do you think Taiwan's and how are they recalibrating, deterrence or changing up their strategy here in any way?
Sure. So any large-scale military operation is very complex, and you need professionally competent officers in charge at the top, especially for these things to happen. And right now, the PLA's chief of staff position is vacant. The CMC, the highest national defense decision-making organ, is basically empty, except one officer who's been a career political commissar. So all these spell trouble for the PLA's warfighting capacity.
Okay, well, there is plenty being said here, Dr. Yang. But if we were to just remember one thing, what is the core takeaway about how President Xi is going about remaking the PLA, and also what it means for the region?
Well, there's a lot of instability at the top of the PLA, but we do not know where is the end game. What is the end game? And in terms of for the region, I would say that the chances of the PLA initiating a conflict, a large-scale conflict, has declined drastically.
All right, so plenty to watch out for in terms of how that reshapes behavior down the chain as well as the region. Thank you so much for your time and thoughts, Dr. Yang Zi, a research fellow, deputy coordinator at the S. Rajaratnam School of International Studies. And of course, for more of our related coverage on China's military shakeup, do head over to our website, cna.asia, or browse on our mobile app, including this analysis piece on what's making this particular purge stand out. A time now for a short break, but coming up on East Asia Tonight, a message from Hong Kong's chief executive to global investors in these uncertain times. CNA's Roland Lim will be joining us live from the Asian Financial Forum.
One year into the Trump administration.
The current state of China-U.S. relationship is characterized by two words. One is relative stability. The other is fragility.
This truce cannot last unless we address the structural problems in the relationship.
China-U.S. relations, the next chapter, Monday on CNA.
More than 5 centuries ago, from these remote islands in the southern Philippines, a powerful dynasty rose.
How many generations of sultans must have sat in a palace that looked just like this?
How did they repel colonial invaders and harness the riches of the ocean?
These are the treasures of the Sulu archipelago.
The Mark of Empire Season 3, tonight on CNA.
Saturday on Japan Hour. Cycle to Shimane Prefecture, famed for the Matsue Castle.
そして中は左側通行です。なぜ左側か。お主、刀がここにある。
It's easy to see why Shimane is the land of legends.
好きっていうものだけですね。好きでやりたいって思ってやって。
Japan Hour, Saturday on CNA.
Japan Hour is brought to you by Sumitomo Corporation. MUFG, committed to empowering a brighter future. Zip Air, no fuel surcharge from 216 Singapore dollars. and IHI.
When a rare genetic disease strikes not just one, but two children in the same family.
What was scary was the call came at night. He said, tomorrow 8 a.m. come with all the brothers.
It changes who they are and how they live. Yet, through it all, a parent's love remains unconditional.
As she grows older, the sooner that she's leaving us. So we do whatever we can. We take care of her while she's here with us.
I remember telling her that we love her and we will never forget her.
Life Unexpected Season 2, on demand at cna.asia.
Hello there again. You're watching East Asia Tonight, and it is now time for your business news. Roland is not here because he is in Hong Kong for the first day of the Asian Financial Forum, which is the region's first big finance gathering of the year, bringing together thousands of leaders and decision makers in government and business. And this year's theme is Finance Empowering Business, focusing on how money and the markets power the real economy. So let's go live now to Roland Lim at the Hong Kong Convention and Exhibition Centre. Roland, Hong Kong's leaders, I believe they're painting a picture of a world becoming more fractured. So in that environment, Roland, what is their pitch for why Hong Kong matters more than ever, and what sort of concrete moves are they announcing to back that up?
Right. Hong Kong's financial secretary, that's Paul Chen, he struck a rather stark note at the Asian Financial Forum today, saying that the world is entering an increasingly unfamiliar era where long-standing allies could become adversaries, and even the principles that have underpinned the international order for decades are now being openly challenged. Here's what he had to say.
A key theme emerging from Davos was diversification across trade, supply chains, and finance. Faced with growing uncertainty, economies are striving to forge new partnerships and gain access to alternative markets.
And he argued that Hong Kong is becoming a more and more important in that shift, positioning the city as a reliable gateway to mainland China, as well as being a regional hub, offering what global investors are looking for. He says common law system, free flow of capital, low tax environment, and a currency that's linked to the US dollar. And speaking of the US, Goldman Sachs' base case for 2026 is for sturdy global growth with some Fed easing, and that's going to be supportive of risk assets, but with the biggest swings because of valuations of being high, as well as geopolitics, especially with the US-China power race that's going to be shaping up commodities and the supply chains.
I think we are on the verge of an economic soft landing, but a geopolitical hard landing. Economic soft landing and geopolitical hard landing. Let me explain that. Economically, as has been said, I do believe we're set up for a constructive take in 2026. It doesn't have to be that way. We can still make a mess of it. But if you think about the starting position, there is real momentum coming out of 2025 in terms of economic growth. Our view, I think you said 3.1, we think 2.9% for global growth. We think China, 4.8%. We think the United States, 2.9%. We think the Euro area, 1.2%. And within that, there's lots of high points and low points. India, 6.7% at the higher end, and clearly there are parts of Europe which would be close to zero.
And some big deals that I would be remiss not to mention here. Hong Kong's Monetary Authority, central bank, has announced that it'll double the quota of RMB business facility to 200 billion yuan. That's after heavy demand from banks, which exhausted the first 100 billion in just 3 months alone. And the government says Hong Kong is also working with the Shanghai Gold Exchange to strengthen links between the two markets, including building a new gold central clearing system and developing what it calls a global vault network. It's targeting more than 2,000 tons of gold of storage capacity within the next 3 years.
So, Roland, you mentioned Hong Kong's role as a hub. You also managed to catch up with Hong Kong Exchange's point man on IPOs. So tell us, what did he have to say about markets as well as listings?
Right, yes. Johnson Choi runs the global issuer services at the HKEX. So his job is basically attracting and supporting companies that list here in Hong Kong. HKEX, of course, has been pushing the idea that Hong Kong remains a major fundraising hub. It had a bumper crop in 2025, and Choi points out to me that the big IPOs and fundraising momentum still set to continue in 2026. Let's run that short TV interview I did earlier.
A lot of the key thematics that we experienced last year has extended to 2026, and we'll see that in the pipeline as well. So a recap of 2025, we had 119 companies listed on the Hong Kong Exchange, raising around $37 billion US, and that placed us as the #1 IPO exchange globally. And there's a few very interesting factors and thematics on those IPOs. One is, from a sector perspective, it's quite broad-based. So tech is a big sector, healthcare, biotech, clean energy, consumer retail. And towards the second half of last year, we actually saw a resurgence of a lot of metals, mining, and commodities type companies. And with those thematics in 2025, as you mentioned, we're 3 weeks into the new year. We have 12 companies listed in Hong Kong. And again, technology and healthcare are the prominent sectors. And it's quite healthy, and it really shows HKEX really as the bridge for issuers, corporates to tap the capital markets, to really tap international and regional and also the China investor base.
What's actually driving this blockbuster year that you're predicting for 2026? What's the breadth of the investor profile like for IPOs here in Hong Kong?
Yeah, so it's actually been very exciting and encouraging for past years' IPOs in Hong Kong. We've seen a very wide spectrum of investors participating, so ranging from institutional investors across the long-only and hedge fund universe, a lot of investors from the US, from Europe, regional Asian investors, and we've also seen sovereign wealth funds pretty actively participating in IPOs. For selective transactions, we've also seen Middle Eastern investors quite prominent. And in addition to that, in a lot of the cornerstone tranches of the recent IPOs, we've actually seen PEs, VCs, and also strategic investors that operate within the value chain of specific companies. So it's actually quite encouraging.
And within the subsectors of IPOs listing, I mean, AI, semicon stocks are really hot right now. How would you actually help investors to pick the right ones, as it were, and not just believe the hype?
So it's a collective effort with our entire intermediary ecosystem as well. But on the tech side, it's actually quite exciting and interesting. Clearly, the excitement part is the emergence of a new wave of tech companies. There's AI, there's robotics, there's semiconductor companies. It's increasingly broad-based. From an exchange perspective, in order to facilitate the growth and also flexibility of these companies to list in Hong Kong correspondingly for investors and for the market to invest. For example, last year in May, we introduced the tech channel, which really focuses on providing more support for companies in the specialist technology and also biotech space. We've dedicated team in helping these companies to list, and we also introduced the possibility of companies to choose to file on a confidential basis.
The HKEX has also talked a lot about attracting investments from Southeast Asia and from the Middle East companies to try and list here in Hong Kong. What's in the pipeline? I mean, have a lot of companies shown interest?
We are increasingly seeing more international companies also considering tapping the Hong Kong market for their international and maybe regional expansion. And on that front, last year, we saw a good handful of international companies, particularly from Southeast Asia in the ASEAN region, across many sectors. Metals, mining, commodities, biotech, technology, and also consumer retail. And in addition to ASEAN companies, last year we also had Central Asia, a Kazakhstan tungsten mining company, a Dubai headquartered consumer company, which primarily operated their business in the MENA region.
So there you have it, the first day, balancing out being realistic about geopolitics and market risk. At the same time, a strong push for innovation as well as capital raising here in Asia. Oteli, it's back to you.
Well, thanks, Roland, for that report. And of course, we'll have more coverage from Roland on day 2 of the Asian Financial Forum tomorrow. Looking forward to that. Well, meantime, China's richest province has announced its GDP for 2025. Guangdong grew at 3.9% last year, below its own target range and the national one of around 5%. Guangdong authorities presented their work report today. Guangdong's GDP remains the highest in China. It tops all the other provinces for the 37th year running, with last year's economic output at 14.6 trillion yuan. That's about $2.1 trillion US dollars. Now, as China enters a new 5-year plan this year, Guangdong also announced that it will set its growth target for 2026 at 4.5% to 5%. But Governor Meng Fanli noted that the province faces challenges, pointing to changes in the external environment, as well as the need to boost demand in the domestic market. Guangdong is China's manufacturing powerhouse, bordering Hong Kong and Macau. Just last year, the province's foreign trade volume hit a record $1.36 trillion US dollars, contributing about 1/5 to the national total. Well, meantime, financial markets in Greater China ending flat today. Technology names were the main drags, largely due to lingering investor worries about a bubble in the artificial intelligence sector. But a historic rally in gold is helping to lift sentiment for non-ferrous metals in China. Now, an index tracking such shares finishing the day about 5% higher, as prices for the precious metal extended gains beyond $5,000 US dollars an ounce for the first time in history. Investors have been piling into the safe haven asset amid rising geopolitical tensions. Let's look at the Japanese yen also strengthening against the US dollar. Well, there's been speculation that the US and Japan could be coordinating to conduct rate checks following remarks from key officials. It's typically taken in preparation for direct intervention and can also use to scare speculators in the foreign exchange market. Now, Japan's finance minister said that the government is watching closely and acting accordingly to a joint framework signed with the US. All right, on that note, it's time to go for another break. But coming up on East Asia tonight, India marks its 77th Republic Day with a grand parade. European leaders attend ahead of a landmark trade deal. Our correspondent joins us for the latest from New Delhi. And Sri Lanka builds a brand new city on the sea. Backed by China, Port City Colombo aims to become a hub for finance, tourism, and tens of thousands of jobs. Details next.
The weather brought to you by Nippon Paint.
Washable, anti-mold, durable, strong coverage. Nippon Paint Odorless, Singapore's most popular paint brand.
With the uncertainties of the financial world, where does our economy truly stand? Keep up to date with the latest market trends and get the in-depth analysis that you need to understand the forces driving the global economies. Kickstart your day with an informed view of the business world. Asia Business on Asia First, weekdays on CNA. Brought to you by UOB.
This is East Asia Tonight, and here are the headlines we're following. Japan's Prime Minister raises the stakes in a leaders' debate, vowing to resign if her ruling bloc fails to win a majority in the upcoming snap election, just a day before campaigning kicks off. Meantime, Ms. Sanae Takaichi is losing ground. Polls show her approval slipping below 70% for the first time on concerns over the Prime Minister's economic plans, but support for her ruling LDP has edged up. And Taiwan on alert after China's latest military probe, including top General Zhang Youxia, a shakeup that has reduced the Central Military Commission down from 7 members to just 2, including President Xi Jinping. Well, India marking a milestone moment as it celebrates its 77th Republic Day, a national showcase of strength, identity and ambition on a day that commemorates the adoption of the Constitution and a break from colonial rule. Now, the capital, New Delhi, turned into a vast parade ground. Military bands, horses and camel cavalry units marched through the city. And India rolled out its latest military hardware. For the first time since last year's military standoff with Pakistan, air defense systems, missiles and drones used in the conflict were showcased. Now, the parade is presided by Indian President Draupadi Murmu, who received a congratulatory message from Chinese counterpart Xi Jinping. Now, he described Beijing and New Delhi as good neighbors, friends and partners. Mr. Xi adding that ties between the two countries have continued to improve and are important for global peace and prosperity. A global diplomacy was also on display in New Delhi. European Council President Antonio Costa and European Commission President Ursula von der Leyen attended the parade as chief guests. Now, their visit comes ahead of an EU-India summit, where both sides are expected to unveil a long-awaited free trade deal and a new security partnership. And for the very latest, Neha Punia is reporting for CNA from New Delhi. Neha, first up, tell us what stood out at today's Republic Day parade and essentially what does it say about how India wants to project itself this year?
Well, Telly, this has always been an affair that's known for its pomp and grandeur, and that was very much the case this year as well. But there was a much bigger emphasis on military prowess and battle readiness. A lot of people talking about how the parade left them with a unifying sense of pride because there was a very big, display of India's war weaponry. There was, new units that were raised, that were displayed to show that India is ready to respond very quickly to external threats. And this is coming just months after that conflict between New Delhi and Islamabad that happened in May last year. And since then, India has very much said that it remains in that state of readiness to respond to any external threats. There was also a tableau that showed terrorist infrastructure that New Delhi claimed to have targeted inside Pakistani territory, something that Islamabad had claimed was an attack on civilian territories. But while all of that happened on that, central road that connects the president's estate to India Gate, just off that boulevard, you had another display of sorts. You had the top EU leadership engaging with India's Prime Minister Narendra Modi, Ursula von der Leyen wearing, a dress made of Indian silk, a lot of camaraderie, laughter, a very carefully crafted sense of ease being projected, experts say, because the message here is that this is the first time that EU's top leadership has been invited to be chief guests at India's Republic Day parade. And this is New Delhi signaling it's doubling down on its engagement with the bloc.
So, Neha, EU leaders, they're in India ahead of this expected trade deal. Tell us essentially how important this partnership is for New Delhi, as it manages its ties with superpowers US and China.
Absolutely. I mean, both, partners are victims of circumstances, experts say. And historically, we have seen how India has used an invite to its Republic Day parade as a tool signaling diplomatic intent. It's coming at a great, time of geopolitical chaos and churn around the world. You've got EU-US tensions over Greenland and tariffs. You've similarly got Indo-US tensions over that trade deal that's been in the works for a year but has not been signed. Experts say what New Delhi is trying to signal here to the world, but particularly to Washington, is that it's a country that is not without options. It has partners willing to engage with it, and it itself, in turn, is willing to engage with these partners as well. If the deals of the terms of the deal, beg your pardon, are right, which is what seems to be the case here. We're expecting that trade pact to be announced on Tuesday. When it is signed, it will create the largest trading bloc in the world. We've heard what Ursula von der Leyen has said on Monday, saying that a successful India makes the world more stable, prosperous and secure. And, the aim here is for both partners to reduce their reliance on the American market, but also to diversify supply chains away from a country like China. Listen into what Maros Sefcovic, who's the EU Trade Commissioner, told CNA earlier.
We in Europe, we believe in low tariffs. We believe in smooth business operation. We believe in mutual advantageous trade relationships, in mutual job creation, and making sure that always, when you approach this agreement, they have to be good for both sides. So that's the philosophy which we are kind of advancing already for decades. Therefore, we are biggest trader on this planet, despite of all turmoils and despite the economic power of China and United States of America.
And a security and defense partnership pact is also expected to be signed on Tuesday, which will only be, the third such pact with an Asian country that the EU signs. And this is clearly a signal and intent as far as China is concerned. And the EU doing what America has done historically in the past, Otelli, looked at New Delhi as a counter to China's ambitions and actions in the Indo-Pacific. And the EU signaling, experts say, that while America wants to take a step back, the EU wants to take a step forward to fill that void.
I appreciate that analysis. Thanks for that. Neha Punia reporting for CNA from New Delhi. Sri Lanka is building a brand new city out at sea. In fact, it's the country's first special economic zone with its own regulator and rules. Port city Colombo is built on some 270 hectares of reclaimed land beside the capital, Colombo. Now, Port City is also Sri Lanka's bid to create a new hub for finance services and tourism with China's help. Now, the main developer is state-owned Chinese Harbour Engineering Company, which has pumped in some $1.4 billion in initial investment tied to the broader Belt and Road footprint. And it's not just office towers. The master plan includes major public spaces with parks and beachfront areas. And if it delivers on its promise, more than 200,000 people could live and work there by 2041. The scale is massive. Total investment is projected at an estimated $15 to $20 billion. And backers say that it can bring jobs, foreign capital, and possibly turn Colombo into a regional services hub. But even as Sri Lanka markets Port City city to the world, it is also scaling back generous tax breaks linked to the project to align with International Monetary Fund guidelines after the economic crisis. So the big question is, can Port City attract a truly global mix of investors? And can Sri Lanka offer rules stable enough to turn gleaming infrastructure into real jobs and long-term growth? Well, here to answer all those questions and more, we have in our studio Sri Lanka's Presidential Special Envoy for Foreign Investments, Hanif Yusuf, in Singapore for an investor forum. Essentially, you're here to promote Colombo Port City to potential investors. So, Mr. Yusuf, here is the big question, and it's a big picture question. Tell us, what is the big economic promise behind Port City?
The biggest economic promise is a service hub to service South Asia. We really feel that this would be a transformation. This would take Sri Lanka from a position of recovery to reposition itself, and that's what you're looking at. So this is why we want to develop Port City, which is just outside the CBD, like you said.
So I believe you are going to be entering phase 2. Perhaps just tell us what sort of progress has been made, and also what are some of the challenges that's perhaps still holding Port City back?
At the moment, as you see, the Port City is complete, it's reclaimed, the land has been reclaimed. Few buildings have come up. The anchor clients have signed agreements to put up the buildings on. So it's there on track. All the challenges we're having is that country gone through a debt crisis, and all that perception that they have about the country has been worrying some people. It'll be a little slow, but I'm confident, and there's another perception as to who owns the Port City.
Exactly, and you're here to clarify that for us, because many people have the impression, right, that Port City has major Chinese involvement in it, is often linked to Belt and Road. And how does Sri Lanka, I mean, how do you frame that partnership? And also, how do you ensure that it's a commercial project that's open to everybody?
It is indeed a commercial project. Let me explain that. I mean, I'm happy with the opportunity of telling that. The Chinese, the harbour, built the Port City. They did the infrastructure of the whole Port City. But Port City, the land in Port City belongs to the Sri Lankan government. The rules and regulations are made by the Sri Lankan governments. There is this Colombo Port Economic Commission, which is done by the government, which approves every project that gets into the Port City. So it would have been Chinese built for the infrastructure, but it's going to be definitely going to be Sri Lankan run and owned, and the laws will be Sri Lankan laws. And how do we get other people? I can tell you now, we've got about 140 applications already approved, and we've got 200 more on the pending list for approval. And if you look at the mix of the investors, they're from all over. The Chinese, if you look at it was about 13% when I saw last. There are people from Middle East, there are people from Far East, people from Europe. It's getting momentum. It's not restricted to one particular country.
But China itself, at 30%, still makes up the bulk. 13%. Yeah. So where do you expect the bulk of investors to be coming from?
I feel bulk of the investors, in my view, that where we are going would be from the Middle East and from Europe.
But I think also, I mean, investors are also watching quite closely because IMF-linked tax breaks, they have been massively scaled back to a certain extent. How does that reshape, investor appetite? How does that reshape China's investment? Not to mention that China itself is facing some economic headwinds.
Yeah. It's true, but actually I welcome that scaling back, because what it was a blanket approval for a certain amount of years. Does not matter how much you invest in the Port City. But IMF has brought us fiscal discipline to our country, and we are one of the people that has come out of the crisis so fast from anywhere in the world. I mean, we have followed the IMF policies, and this policy of scaling back is a good thing. So it has got brackets of we want serious investors. We want serious investors. So people who are serious investors want to see predictability and stability more than tax incentives.
So, I mean, your job when you're out there and you're trying to woo investors, right? I mean, what do you say to those who say, Sri Lanka has just gone through this major political change, right? I mean, some will probably be worried about how it affects the continuity of projects like Port City, for instance.
Yeah, just before that, I want to say that Sri Lanka is Asia's oldest democracy. We had always had elections. We didn't have any other things. Elections were held on time. Everything was going. People also were very, very tired of political instability. So we have an administration which has got 2/3 majority power. And really, the Port City is not a political thing. It's an economic thing, so nobody would touch that. Everybody wants to have foreign direct investment in the country. We need it, and we are going to develop that.
And also, but that also inevitably brings up Hambantota, right? Because investors and public, they sort of remember what happened there.
Yes.
What lessons did Sri Lanka learn from that project, which was, required a lot more financing, governance, and that sort of stuff? How are those lessons reflected or learned for Port City today?
So there are two different projects. Hambantota was a sovereign-backed government debt project done. And the Port City is not. Port City is public-private, 100% private investment. So it's two different angles totally. That was sovereign debt backed by sovereign debt. This is not. This is not. Lessons would have learned from Hambantota would be any projects that you do must be commercially viable.
Right. So, well, okay, so ultimately, if Port City is meant to be a global hub, right? I mean, the proof is going to be in who shows up. So at this question, I mean, you are optimistic about attracting a whole broad mix of investors, including from Singapore, right, from the Gulf, as you mentioned. But what would you say is the single biggest barrier that you're trying to remove right now? Is it the perception that's still the issue?
It is the perception. That's what I'm battling on. That's why I need to get on the road and tell them about the true story of Port City and why it's not what they think it is.
So just going back to how you're trying to convince the investors, right? What sort of safeguards are in place now within your country to make sure that the policy is steady, approvals, and that politics is not going to be swinging the policies itself?
No, the Port City regulations are governed by an independent government, not to any line ministry. The Colombo Port City Commission is the independent regulator, and all the regulations are in place, and they're governed by international conventions. So I don't see any risk in that.
Okay, well, I certainly wish you all the very best you've got your investor forum tomorrow.
Thank you.
I hope you get to attract as many investors as possible.
Thank you so much. Thank you very much.
And there I was just talking to Sri Lanka's Presidential Special Envoy for Foreign Investments, Hanif Yusof, in Singapore for an investor forum promoting Colombo Port City to investors. Right, we're going to go for another break now, but coming up in East Asia tonight, Chinese electric cars could soon hit Canadian roads in large numbers. Cheaper EVs, new trade opportunities, but could local jobs pay the price? We'll find out next.
More than 5 centuries ago, from these remote islands in the southern Philippines, a powerful dynasty rose.
How many generations of sultans must have sat in a palace that looked just like this?
How did they repel colonial invaders and harness the riches of the ocean?
These are the treasures of the Sulu archipelago.
The Mark of Empire Season 3, tonight on CNA.
Home loan rates are near 15-year lows. Where does the smart money go next? A strong run for Singapore bank stocks. So are they still a buy? Plus, when buying is too expensive, how do you still get your hands on a premium phone? Money Mind, Wednesday on CNA.
South Korean authorities have detained 55 people repatriated from Cambodia last week over their suspected involvement in online scam operations. Well, the suspects are among 73 South Korean nationals who were arrested in Cambodia and flown home last Friday. Authorities say a decision on whether to detain the remaining 18 returnees is expected later today. It marked the largest repatriation of South Korean criminal suspects from a single country. They're accused of swindling more than $33 million from nearly 870 South Korean victims. The trade deal between Ottawa and Beijing that slashes tariffs on Chinese-made EVs is opening the door to thousands of lower-cost EV imports into Canada each year. It means more affordable options and a chance to expand trade beyond the U.S. But critics also warn it could put Canadian auto jobs at risk. Karina Huber files this report for CNA from Montreal.
The latest vehicles for Canadian consumers are on display at the Montreal International Auto Show. More than 30 brands are here, and roughly 40% of the lineup is electric.
Quebec is known for the EV market across Canada. I think we're #1 across Canada, if I'm not mistaken. And the Montreal Auto Show is just perfect for them. They can cross-shop all the cars under one roof, and they can choose whatever they want.
Vehicles from Europe, the United States, South Korea, and Japan are on display. What you don't see are Chinese-made cars, despite China being the world's top EV producer.
That's set to change with Canada's recent decision to reduce tariffs from 100% to 6.1% on up to 49,000 Chinese EVs per year. That amounts to roughly 3% of annual car sales in Canada.
The policy shift follows a landmark meeting in January between Canadian Prime Minister Mark Carney and Chinese President Xi Jinping, who agreed to lower tariffs on Canadian agricultural products in return. The deal also supports Canada's goal of doubling non-U.S. trade over the next decade, as relations with the U.S., its largest trading partner, grow more strained. Diversifying partners is what Carney calls a necessary shift for a new world order.
We know the old order is not coming back. We shouldn't mourn it. Nostalgia is not a strategy. But we believe that from the fracture, we can build something bigger, better, stronger, more just. This is the task of the middle powers.
Canadian consumers looking for more affordable options could benefit. Chinese-made EVs can cost $10,000 to $15,000 less than comparable models and receive strong reviews.
China hasn't just caught up. They've jumped far over the rest of the world, and their cars are very good.
Nevertheless, Mordu says Chinese automakers will face hurdles entering the Canadian market.
Selling and distributing vehicles requires an infrastructure, and it requires regulatory approval to sell individual cars in the Canadian market.
BYD and other Chinese EV makers don't have that infrastructure yet. But Western brands like Tesla, which manufacture in China, already do, and could be among the first Chinese-made EVs to benefit. Tesla has equipped its Shanghai plant to build and export a Canada-specific Model Y and has a network of 39 stores across the country, giving it an advantage. Canada's EV manufacturing footprint is currently limited. Stellantis builds the Dodge Charger Daytona EV in Ontario, but sales have been weak. General Motors shelved plans last year to produce EVs at an Ontario plant once slated to be Canada's first full-scale EV facility. Its future is uncertain. While Canada's EV output is minimal at the moment, Unifor, the union representing Canadian auto workers, warns Chinese EVs could threaten Canadian jobs in the long run. Ontario Premier Doug Ford is calling for a boycott of Chinese EVs. Others worry about antagonizing Trump as Canada prepares to review its free trade agreement with the U.S. But Julian Karagesian, a former special advisor at Canada's finance ministry, says trying to appease Trump hasn't helped.
The spear point of Trump's trade policies is to get auto production back into the United States. No American cars were going to be made outside of the United States. They're going to come home from Mexico. They're going to come home from Canada. So we're losing auto production from this administration. So we might as well do what's in our interests.
To ease some of the labor concerns, Prime Minister Mark Carney says the deal could attract joint ventures and Chinese investment. But with Trump officials vowing to block any Chinese EVs from entering the U.S., marketing Canada as a destination could be a tough sell.
Then again, Chinese officials tend to think long-term, and the Trump administration won't last forever. That could mean more Chinese EVs appearing in Canadian showrooms before long. Karina Huber, CNA, Montreal.
Now some headlines from media outlets in East Asia. Yonhap News Agency says South Korean police believe personal data from more than 30 million Coupang user accounts may have been stolen. Now that's far higher than the company's claim of just 3,000 cases. Authorities say they are probing whether Coupang deliberately downplayed the breach. NHK, quoting Japan's weather agency, says extreme snowfall affecting the country has peaked, but warns people to stay cautious as snow levels remain well above average. Bad weather has disrupted transport, with record snowfall in parts of Hokkaido forcing train cancellations and leaving many travelers stranded at New Chitose Airport. The South China Morning Post reports a cyclist has died in Hong Kong after being hit by a car in Taipo, just a week after another fatal cycling accident. The man in his 60s was struck on Ting Kok Road and later died in hospital. Police have arrested a 70-year-old driver for dangerous driving. It was meant to be a festive Lunar New Year toy, but an accidental design flaw has turned it into China's latest viral hit. Shoppers in Yiwu, home to China's biggest wholesale market, have been snapping up a red plush horse with a gold bell and a distinctly miserable expression. Online, it's been nicknamed the Crying Horse. The toy was originally designed with a happy face for the Year of the Horse, but a manufacturing mistake turned its smile into a frown. But the error seems to be exactly why it's selling so well.
很多客户都喜欢，都在这里了吗？也说得很有道理，适合当代上班的牛马精神。然后很多客户都喜欢，后来就卖得很好，卖得很好嘛，就一直这样子做下去，一直这样子做下去嘛，现在还不错，销量还挺好。
Vendors note the toy's appeal lies in how closely its expression mirrors that of many young employees experiencing workplace stress. It taps into a broader trend for so-called ugly cute toys popularized in recent years. The sellers say racks of the sad horses have sold out. And that wraps up this Monday's edition of East Asia Tonight. Don't forget your headlines anytime at cna.asia. Thanks for watching.